Hello everyone, welcome back to the channel, best place for long-term stock investors. Now, in today's video, we're going to be talking about Hartalega. Alright, so in the previous video, we did a little bit of discussion on Top Glove. This time, we're going to be discussing, is this the bottom for Hartalega? And if you as an investor should be paying attention to this company. As a disclaimer, none of what we say should be taken as financial advice. This is purely educational. And as another disclaimer, we do not own any shares in Hartalega.
Right guys, before we begin, just to let you know, on the 1st of December, 8:30 p.m, we will be reviving our deep dive series. And guess what? It's going to be on gloves. So if you want to hop on the early bird pricing, you need to sign up in the link or the comments and make your purchase before the 27th of November midnight so that you can get a 30% discount.
Alright, MJ.
Yo.
So Hartalega is down more than 67% year to date. And yeah, is this the bottom for Hartalega?
Well, it seems that way. I mean, the low was what? Early or late September. I believe it's up something like 18%, 20%, something like that. So, I mean, if you're just looking at the chart, that's what it's saying. But
Correct.
of course, you know, it's just a chart, right?
Yeah, and I believe they also did announce their recent quarterlies.
Yes,
right?
correct.
Yeah, and if we look at it, I see that there's two highlighted ones. So I think operating expenses is now down
Yes.
quite a bit, and they are making a profit.
They are, but why I wanted to highlight is because it gives some sort of insight into the business and what they've experienced. So you can see that a lot of the gains in 2021, when it dropped from 2 billion odd, corresponding quarter to 500 million, that is roughly a 75% drop. But the operating expenses only dropped by that amount. So it's about, if I eyeball it, dropped by 30%, I want to say.
Yep.
Something like that, 30-40%. So it shows how once-off 2021 was, because they only needed roughly only a little bit of staff or a little bit more operating expenses to produce, a much higher revenue. But now we are seeing the reverse, where when the revenue dropped so much, but the cost is not dropping as fast. So obviously all of this is contributing to the reduction of profits.
Right. Okay.
Efficiency.
Sure. But will this continue to maintain at such low levels, or do you foresee in the next few
it will definitely normalize.
Okay.
And right now you're looking at 8 to 10% growth for the industry.
Yep.
I remember Hartalega, I think 2 years ago, doing a briefing, said that it could be as high as something like 12%, 13%. Sounds small, right? 10 to 12%, but every 1 to 2% increase can be pretty huge. So that's pretty good. But we'll talk about utilization and all that later on, because that also plays into a lot of this discussion.
Right.
But it should normalize over time. Although I'm sticking my neck out here a little bit, I think it will normalize, but slightly higher than previous. Because I think that people are now more hyper aware of, pandemics and health and all that. No, it's like work from home, right?
Yeah.
So obviously now working from home is normalizing. People are going back to office, but you are still hearing things like working from home 2 days, 3 days, things like that. People are starting to realize the importance of getting their staff to be able to work, sometimes at home, sometimes in the office, or some sort of mixture depending on industry. And so they've woken up to that when they could have figured that out before COVID. Similarly, people could have figured out the importance of gloves and why you actually need to increase your gloves per capita as a country, but nothing spurred them on to take action. So now it has. And so I do think it's going to normalize, but higher than the previous normal, which is pre-2020. That's my opinion.
That's a pretty positive and relieving news. Okay, if you look at their cash flow statement, right? Also, I mean, is there anything that you want to comment?
No, I think the only thing I would say is that I think it's just testament to Hartalega that even despite all the issues that they're facing, they're still cash flow positive on the operating side lah. But of course, when you include the others, they're not.
Yep.
But they have a big cash pile anyway. I believe it's something like if you can go to the balance sheet, yeah, you can see their cash. You know, the reduction is only about 400 million.
Yeah.
So still pretty decent.
Yep. Actually, it's not that bad. And I've also noticed that they have been getting more. They have been getting more sales like production output to going out, because you see that net change in inventories and receivables is actually like reducing lah in their inventory, and the sales is being converted into sales.
Yeah, you have to remember that there was a lot of stockpiling during COVID because everyone was fearful, and so people are clearing off those stockpiles first. And of course, this period of clearing the stockpilings will mean that glove companies, Hartalega included, will not be able to make more sales lah. But as you can see, slowly it's coming back.
Yep. Okay, I think this is the final comment by the management team. So I see a few things. So they did mention that the rising operational cost is because of the increase in natural gas and electricity tariffs. And also there is a overcapacity from aggressive expansion. I think that is due to the competitors, right? Yeah, they're all trying to like get more market share, but that lead to an oversupply issue. And then
that's correct.
So all of these things is happening. I believe the management is not really hiding. I mean, they are really honest. Yeah, they are like very frank that they are facing a problem right now. But that problem is they are slowly managing it, and I believe that Hartalega can definitely solve this problem in the near term. Yeah, any comments on this?
Yeah, so if you read in between the lines, what they're really saying here is that they are trying to make fun of their competitors. Actually, that's really what they are doing. The overcapacity of aggressive expansion as well as buyers' excessive stockpiling has led to that. Yeah, they didn't aggressively expand, but we know who in other companies.
Yep. Okay, so I think in the next segment, we're going to be talking about their utilization and the oversupply issue.
Alright guys, if you didn't know, we have a one-on-one mentorship program where you can apply for, where we level up your stock investing based on tailor-made solutions. If you're interested, you need to apply. Not all of you all will get into an interview. It's only 20% of you all will do it, and even fewer will get to hop on the program. But if you're confident that you can qualify, you can click on the link and fill in your details in the comment section or the description.
Okay, MJ, so the utilization rate, if we compare between the two quarters for financial year 2023, right, the current one is actually going down a bit. They are operating only like 49% of production utilization rate, whereas in the previous quarter, they're actually, I would say, 20% even higher than the previous one. So it looks like they are still struggling to make it into full capacity. So any comments on this?
So historically they've been at something like 80%. So you can see here. This is just MIDF's projection, I believe. Right? So I think what is important to realize is that when we look at the numbers here, it's going to be a bit choppy. So I mean, this is just quarterized numbers.
Correct.
We really have to drag it out over a year to see a much clearer photo, statistics-wise. But I think utilization is a lot harder to predict than like normalization, because normalization can occur in terms of demand, but supply is a bit harder to figure out, right? And that's one of the questions we'll be tackling in our deep dive upcoming on the 1st of December. That's a lot harder because you have the street trunks, we have the
Kingo.
Exactly. It's anyone's guess, right? So who knows? But as an investor, I think it's wiser today to lower expectations in preparation. So if this has been the historical utilization chart, then if you look pre-2020, right? So here onwards, it hovers between 80 to, let's say, 90%, 90 odd. Whatever you are factoring into your own analysis, I would suggest going as low as 70% and see what it is. Because if you're trying to bank on the utilization rate, then you're trying to predict something that's very hard to predict.
Yeah,
right?
that is true.
Demand is easy to understand, supply is not so easy to understand. And yeah, that's where I would say I'll give my thoughts on utilization. Whatever analysis you do, whatever spreadsheets you're using, try to go for 65, 70%. Not because it will happen, but so that when you calculate, you know that whether or not it suits your investment
correct
profile, whether it works for you.
Yeah, I think whatever analysis that you come out with, right, always like have a discount.
Yeah, that's the whole idea.
Yep. Okay. So, this is actually a piece that I actually got it from StockBit.
Yep.
And actually, they did mention that the oversupply issue is starting to be easing.
Yeah.
So, according to this writer here, Larry, they did mention, I'm not going to read through everything, right? But the main point is that the excess stock in their inventory will actually be gone soon. And he actually projected to be around quarter one of financial year 2023 or quarter two. And that is actually kind of in line with the analysis with the analysts and also Hartalega's projection.
Sure.
Yeah, which is around like end of financial year 2023, like quarter four or quarter three, quarter four.
You mean next year, October, November, December?
Yeah, around that time.
Because Hartalega's financial year end is a bit different.
Yes, correct.
Push for a little bit. Yeah. So yeah, I won't dispute anything, but you have to remember that sometimes industry leaders or even experts cannot predict. And what more you as just a normal investor like you and I. That's why I think it's vitally important to always come up with scenarios in your head, worst case. In our own research team, we always have a bull bear and then base case, right? So, you don't want to have sunny projections and you want to assume that demand, when they say demand is 8 to 10%, assume it's 8%, maybe even less if you really want to go there. If they say utilization can go up to 90%, assume it's 70%, things like that. So your job as an investor is to prepare for like the worst scenario. Now, the second thing I would add is that even though it is reducing, you have to recognize that the market needs to recognize it. And perhaps they've had some small recognition now already. So whether you decide to put on money or not, it's up to you, obviously. But you always have to remember to consider that your analysis needs to be based on conservatism. And then you also need to be half aware, or at least, quarterly aware of the mood on the street.
Okay. Yep, that is actually a very sound advice that given by MJ. Okay, so in the last segment, we're gonna be showing you guys a little bit of interesting statistics on the short selling.
Yep. Yeah. If you're enjoying the video so far, remember to like, comment, subscribe, click on the notification bell so that whenever new videos pop, you'll know it fresh. Jonathan, you have something very interesting, right, about short sellers?
Oh yes. Okay, so all of these statistics, you can actually get it from the Bursa website. And if you look at the, I'll say in the early November, Hartalega's net short position was actually around like 43 million.
Sure.
But and the latest statistic that they actually uploaded, which is on the 17th, it is actually down like 13 million. So this actually kind of like, personally, what this behavior tells me is that maybe there is not much room to short already in Hartalega. I could be wrong, but it's a kind of like a sign to me that the short seller is not making much profit from actually doing what they're doing right now.
I think you're right. Just to add to that, and just to follow up on my previous point, right, about mood on the street. I think the fact that you brought this out is very good, because figuring out what are the short positions on a particular asset, it doesn't have to be a stock, it can be a commodity as well. It can give you it can serve as one indicator as to what the mood is on that particular asset. So you can see here really that going from 43 to 30 million is a 25% reduction of bearishness. So it's not quite zero, right? It's not like the Fang Plus here.
Yeah.
Right? And this is what you want to, take notice of. Is you're not doing this so that you can decide whether to short it or not. It's just to tell you, what's people's idea on this. What other people think of this stock.
Correct. Yeah, fair enough. Okay. As an investor of Hartalega or maybe a potential investor, right? Is there any final words that you can give them?
Well, come, watch our deep dive sessions, right? It's very affordable. It's, $29 for early bird and $36. If you miss it, it's still, it's just less than 200 ringgit, for high quality information. Yeah. So go there and watch it. But just to end the video, I think that personally, I always thought that Hartalega is so high quality and therefore it made it a less attractive investment, which is quite interesting, right?
Yeah.
Unfortunately, many people have very positive views on Hartalega. Well, not unfortunate for Hartalega, of course, but as an investor, the chances of growth, right, in your portfolio is a lot lower.
Yes, correct. I definitely agree about that. Okay, anyways, if you guys are interested to sign up, the link, everything is in the comments or description. And yeah, if you enjoy this type of video, make sure to hit the like, subscribe for more of this type of content. Follow us on our social media, Instagram, Facebook, all of those good stuff. Links are all in the description, and we'll see you in the next video.